Welcome to Markets Now. I'm Michelle Rourke with Martinson Ag, and we're seeing livestock higher this morning. The grain trade is a little more mixed, slightly lower in corn and beans. Wheat is to the plus side. And Randy, I guess let's talk first of all about, the elephant in the room. President-elect Trump saying he's going to put 25% tariffs on Canada and Mexico. What does that mean for this market? And what do you think about the reaction this morning? It's not really much of a reaction yet.
Not yet, but I think what we'll kind of see what we've been seeing, and that is I would expect that if that threat gets carried out, and I think he'll push it as much as he can, but I would expect we'll start to see some more major sales to Mexico. Canada, not so much. I'm not so worried. I don't know how much they'll be bringing into their, how much we'll be doing business with them. But Mexico is a huge buyer of our wheat, of our corn. I have a feeling they'll step up some of their purchases to get those two needs met. I do know that there is some talk about whether or not this is allowable under the the new NAFTA 2.0 agreement. So we'll see if this gets followed through or not. But I would expect that we'll see some business come pretty quick here to step ahead of it.
But you and I have talked about the fact that we thought there was front loading going on by Mexico prior to this. They anticipated this.
They did, and they're also, I think, we kind of got rid of them not wanting to import our corn, because they wanted white corn and non-GMO. We kind of got past that, and they've been buying aggressively ever since that kind of fell into the back burner. So I do think they have been very front loaded. I think even China's been a little bit front loaded and buying quite aggressively as well. So I think they've got another month or 6 weeks to be able to tack on quite a bit more business to try to get as much as they need before they can start depending on somebody else for supply.
Okay, so do you think how supportive is that going to be of prices here for the next few weeks here before the inauguration?
That's a good question. I mean, I think it's going to be somewhat supportive. I think we've got enough where we can maybe trade back up to like soybeans back up to the middle of their range, maybe to the upper end. I think corn has still got friendlier news than just that going forward. So I still look for some support in the corn market, but I do think we could have seen more demand now or in the past couple of weeks if the dollar wouldn't have been so strong. And I think that slowed down some of it.
Do you also expect some front loading in soybeans? He said he's going to put a 10% tariff on Chinese goods, at least to start with.
Yeah, I do. And China needs to get some supplies or get some needs booked. I do think that, through February, they're going to become needing to get supply from somebody else other than Brazil. I think they'll supply them after the February into the March timeframe. So I do think that they will buy yet in December and January from somebody. And we're really the only game left in town.
Yeah. And as we've talked about before, we've thought maybe China was kind of front loading here as well, ahead of this expected announcement, right?
Right. I mean, China knows that they're going to have tariffs put against them. I mean, there's no question about that. It's just a matter of how big will the tariffs be. So I do think they have been, over the last couple of months, come into the U.S. and started to buy. Once the supplies got tight enough in Brazil and Argentina where they couldn't get timely shipments, I think that's when they started coming back to the U.S. and they've been aggressive.
Yeah, in fact, there's been rumors the last few days here, I think maybe even starting on Friday, that China was in to buy more cargoes of U.S. soybeans, and it looks like maybe those are for the reserves.
Exactly. And for the most part, if they're buying the crop to put in the reserves, they like to buy the U.S. because it's a better quality. So it stores a little bit better. But yeah, the rumor is that they bought several cargoes of U.S. soybeans for February shipment. So it kind of stands, kind of fills in what we've been talking about.
The headwind right now, you mentioned demand being good for corn, but the headwind for both corn and especially soybeans is still South America's crop and improvements in really across the board, but especially central Brazil in terms of their rain situation, right?
Exactly. I mean, it's been almost a garden spot down there. They've been getting rains when they need it. The crop looks good. Now, I have heard some long-term forecasts say that the rains are going to continue and there could be some issues going into harvest. And that we won't wait. We'll wait until February, March before we really see that happen. But there are starting to be some concerns started to be raised about the possible quality of the beans once they start harvesting.
Something to keep an eye on there. Okay, the wheat market, we took a little bit of a tumble yesterday. We're back up here today. Are we putting back more premium?
I think so. I think that's, we had a quiet weekend. We didn't hear much out of the Black Sea region as far as the war was concerned, nothing for Ukraine, nothing for Russia. So I think that kind of brought the market down, or had the traders take some profits off the table. And I do think we're seeing some profit taking as well. As, not only are we looking at the holidays coming up on Thursday, but we're also looking at end of month, and a lot of basis fixed contracts are coming due. So I think that kind of cumulated to yesterday's pressure in the market. Today, I think we're just seeing the return to a little bit stronger market potential.
Yeah, and I think the market was also maybe yesterday anticipating better winter wheat ratings, which we got, right?
That's true. I mean, the winter wheat conditions now up 6% for last week. The last rating we're going to see, I think it put it at what, 55%, somewhere in that area. The fourth best we've seen in quite a few years. So the winter wheat is going into dormancy in really good shape.
Right. Talk about what's happening with basis levels for wheat. Basically, all of the grains, but wheat and especially corn have seen very strong basis pushes, right?
We have. I mean, right now, wheat basis up here in the Northern Plains has gotten to be the best we've seen it in years. Where we're talking about positive basis levels in some locations, because I think they're trying to play it's a cash thing. I think they're trying to get the good quality wheat, or get wheat brought out so they kind of know where the quality is. We had low protein, we had high falling numbers or low falling numbers. So there's some quality issues, and I think the market is trying to find good wheat to start blending with some of the poorer wheat. For corn, the end users, even though we've got some piles that are, they're getting cleaned up fairly quickly, we still have the ethanol plants and the corn sweetener plants aggressively bidding for products. So it tells me that our supply might be a little tighter than we expect.
Yeah, and farmers are kind of tight-fisted holding those inventories too, aren't they?
I think the bin door has been welded shut, and there's not a lot looking to try to move grain right now. And we're starting to see winter show up, so it's going to take a little bit more to start those trucks up when temperatures are 0 to 10 below.
Yeah. From a technical standpoint, these grains are still pretty much in their ranges, though, aren't they?
They are. I mean, we really haven't broke out of that yet, and as far as wheat, wheat and corn, we're kind of in the middle, lower end of the range. Soybeans a little closer to the bottom end of the range. Bean oil has been causing some of the trouble in the soybeans, and now that's starting to rally. So that might help support beans a little bit. But yeah, we're still very much in our trading ranges and looking for direction.
So funds actually are long corn, still short soybeans and wheat. And so the short covering has also contributed to the wheat move, or at times doesn't it?
It does, and I think that's going to continue to help. I wouldn't be surprised to see the funds get to be even as far as wheat is concerned. I expect that they're going to continue to buy corn, because corn supplies, I think, will continue to be tightened.
And you mentioned we're going into what we call the holiday black hole, but this year, not only are you going to have light holiday trade, but you got first notice day coming up on Friday, and it coincides with end of the month.
Exactly. So we got the trifecta going there, where you're going to have thin trading, you're going to have the rebalancing of portfolios for the end of the month, and you're going to have cash positions that need to be rolled tomorrow. That basis fixed contracts either rolled ahead to the next month or cashed out. So there's going to be a lot of activity taking place between the cash and the futures here in the next couple of days.
Gotcha. So what about the cattle market? The New World Screwworm is putting some premium into especially the feeder market. What do we know, and how much strength do you think we'll continue to see as a result of it in the cattle market?
Boy, it certainly sent the cattle market sharply higher on Monday. We gapped higher, rallied sharply higher. We kind of lost a little bit towards the end of towards the middle of the session and to the end, recovering a little bit. But overall, we're not really knowing a lot right now. We do know that we have shut the border down to Mexico. That's going to slow down the supply of feeder cattle going into the feedlots. I would expect that it's probably going to be a month or two that we see this kind of disruption, which will be supportive to the feeder cattle market, because it's going to tighten the supplies, and the few that we do have left are going to be at a premium when it comes for feedlots bidding against them and the farmer feeders. So I do think we have a little bit of strength in the feeder cattle market coming yet. I wouldn't be surprised to see us to go up and take what probably test our summer highs. We do have some gaps higher up that might be attempted to, but our contract high is $12 away. I don't think we have that kind of strength in it. But the trouble is that we're getting the feeder cattle market way ahead of the fat cattle market, and that spread between those two is getting too wide.
Right. Yeah, we made new highs for the move here again this morning in the feeders, but as you say, contract high still a ways away. But I'm not going to rule out anything in this cattle market.
Well, I guess that's true. I mean, I've been surprised that we've had the strength we have at this time frame. I figured we had a little bit more room to move. Yesterday was a little bit more than I anticipated, but
Yeah.
right now, yeah, you never say never in the cattle market.
Yeah. Although expect some volatility as we get more details out about this screwworm case and how it's going to impact our border situation. Finally, we'll just quickly end on hogs. Making new contract highs in the back end of the board here again today for a second day. But it looks to me like monthly cold storage report was pretty supportive in the fact that it kind of proves that demand's been kind of pushing this thing.
Demand has been decent, and we kind of expected to see that. And there again, I think some of that could be front loaded to exports going to Mexico, going to China, ahead of what they expect could be tariffs. So that might be part of what we've been seeing.
Yeah, do you think we'll see more business from Mexico, especially in the ham market, ahead of possible tariffs here, Randy?
Oh, I do. I would expect to see that happen here within, like I said, they've got about 6 weeks to 8 weeks to be able to get some more business on the books. And I would expect to see that happen as we go forward.
Yeah, maybe the market is already pricing that in here, anticipating that with this hog market higher. All right, thanks so much. Randy Martinson with Martinson Ag. That is Markets Now.